Surprise London raids hit 8 alleged crypto trading hubs. The immediate tension is that the risk is not only a legal operation. Users may have little recourse if funds are stolen or misused. The event itself is clear. The UK FCA executed raids at 8 London locations targeting unregistered peer-to-peer crypto trading hubs. The first thing to notice is the pressure point, not the excitement around the name. For viewers, the story starts with who can act differently because this happened, and who still faces friction. That matters because the raids show enforcement arriving before the full UK crypto asset framework is in place. A clean opening read is to separate access from proof. Access can arrive instantly, but proof usually appears only after users, traders, institutions, or regulators respond in measurable ways. The confirmed baseline is the operations were supported by HMRC and the Southwest Regional Organized Crime Unit, with cease operation orders and evidence collection. This gives the story a concrete frame because it defines the actors, limits, numbers, and operating conditions. It also keeps the segment away from vague speculation. The surrounding context matters because the same headline can mean different things in a trading venue, a regulatory process, a security patch, or a payments rollout. Here, the baseline shows where the story begins before any bigger claim is tested. The key is to treat the known facts as the floor, then ask whether the floor is strong enough for the next step. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Surprise London raids matters mechanically because UK crypto trading services must register with the FCA and meet anti-money laundering rules. In plain language, unregistered hubs can move funds without the safeguards expected from supervised firms. This is where the story becomes useful instead of abstract. The mechanism explains why a user, trader, developer, investor, or regulator might change behavior. It also shows what could break. If the mechanism depends on liquidity, then depth matters. If it depends on law, then text and enforcement matter. If it depends on security, then implementation matters. The mechanism is the bridge between a headline and a real market consequence. The affected side is P2P users, platform operators, promoters, compliance teams, and UK crypto consumers. For them, users on non-compliant platforms may lose access to compensation or support if fraud occurs. The scope is important because not every crypto story moves the whole market. Some stories change costs for a small group of traders, others shape policy, stablecoin flows, defy collateral or institutional access. This scene should make the effect concrete. It asks who has a new option, who carries new risk, who gets squeezed, and who needs to adjust plans. That is the difference between a story that sounds dramatic and a story that changes behavior. The unresolved part is which operators face charges and how the licensing window changes behavior. That uncertainty does not erase the confirmed event, but it limits how far the story can be taken. The raids are confirmed, but future prosecutions and rule details remain pending. A disciplined read avoids turning early movement into a final conclusion. For crypto markets especially, the first reaction can be loud while the durable signal stays quiet. The best question is what evidence would change the story. It may be usage data, a court order, regulator language, security testing, customer retention, deeper liquidity, or a clearer project timeline. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. For Surprise London raids, the next signal is FCA case steps, registration checks, and license applications from September 2026. If that appears, the story can move from an initial development into a more durable market or policy signal. If it does not appear, the event may stay important but narrow. The closing takeaway is to judge the story by evidence that can be checked, not by guaranteed upside or worst-case fear. Track the signal, compare it with the baseline, and watch whether real users, capital, institutions, or regulators respond in a way that lasts beyond the first wave of attention.